Hold on one
Yep.
second.
He's anxious, Davey. He's ready to go.
We're live streaming, so. Watch what you say. No.
All right.
All right.
No jokes about Rich.
Thank you.
Okay, we're all set, Justin. Thank you.
Okay.
I'll go ahead and start us off and then we'll turn it over to you.
All right.
I'd like to welcome everybody to the Chautauqua County IDA Audit and Finance Committee meeting. We're at the BWB Building, 201 West 3rd Street, also streaming live via YouTube and Zoom. It's February the 9th at 8 o'clock in the morning. We'll start with a roll call. Gary Henry's here. Sagan Sheffield Smith.
Here.
You should have already had a chance to review the minutes from the prior meeting, September 26th of last year. And do we have a motion to accept those minutes?
So moved.
I'll second it. All in favor?
Aye.
Aye. Opposed? The minutes have been approved. We'll go ahead and move right into new business. And so you can take it away.
All right. Thank you. So you should all have the PowerPoint in front of you to look at, and we'll walk through that and have some discussion on some of the aspects of the audit and maybe some things that might be changing for this year, some things that maybe you guys have concerns of. So we'll get right into it. If you want to go to page 3, we'll talk about, one of the first areas is our responsibility under US GAAP, or what we're required to do as your auditors. So we, obviously we're here to express an opinion first and foremost. We do provide reasonable assurance that they're free of material misstatement, but this isn't a fraud audit. It is not absolute assurance or anything like that. We consider your internal controls, and we have a responsibility to report anything, whether it's material weaknesses or significant deficiencies identified, or fraud or anything like that. Then there's also, because you guys are a kind of government entity, we are also required to apply the government auditing standards. So those are a little bit more focused on your internal controls, so that your internal controls over financial reporting. We perform tests of compliance with laws and regulations, the laws and regulations that you're required to follow. And again, similar, we're responsible for communicating any issues we come across. And then thirdly, the uniform guidance, so the single audit, because you receive over 750,000 of federal monies, we're required to complete a single audit. And again, a lot more internal control and compliance focused. We perform tests related to the compliance requirements of the programs we're going to select. It'll probably be the EDA CARES loan fund, and then quite often, if you have enough of the community block grant loans, we quite often have to test that. So we'll have to see what you got this year. It did look like you had a couple OCR grants come through. So, we'll look at those grants. We'll try to figure out exactly what your compliance requirements are on those grants and make sure you're following them. And then there's also, it is not a fraud audit, but we are required to consider fraud. From our responsibilities as the auditor, we are evaluating your internal control structure, and we perform inquiries with your staff just to make sure, nobody's aware of anything, including inquiries at this meeting. We typically will ask you. The audit committee, your responsibility is really just to follow up if you hear of anything. You've got to be, you hope you're in the loop if something were to happen. So if you do come across anything, or there are any allegations floating out there, it's your responsibility is really to follow up and act on it. And then management, your responsibility is, creating that environment where fraud wouldn't occur. Next slide, audit materiality. So we have, 4 areas we look at when we're looking at it: the qualitative factors, fraud risk factors, how sophisticated the financial reporting of that area is, and key personal competencies. So how long, Rich and Kayla have been doing it, and whether or not we need to, if it were, let's say, management just all switched over, materiality may be a little bit higher because we may not have as much reliance on, their capabilities. But, they've been in their positions for quite a few years, so nothing like that. So, we develop these materiality levels, and if something were to rise to a level that's above those materiality levels, we look at it a little bit more. So, it's broken down by fund, and it's also broken down by, overall financial reporting materiality. So then significant factors to the CCIDA this year. So we have, a lot of these have been in here for a while. They're kind of always significant risk factors we have to look at. There are a few newer things. You'll notice the LTAC loan at the bottom there, the allowance for doubtful accounts, and this actually affects the EDA loans as well, and any other loans you have. But there is new accounting standards out there, and the name, you'll see it there in the bottom right. It's CECL. People were calling it CECL. It is about your, building those allowance for uncollectible accounts really for you. That's how it'll affect you. And they've changed the standards a little bit to require you to have a historical look, but also a forward look as well. So you're supposed to look at items like future unemployment rates and other things that could affect your loan repayments, and try to, build those into your allowance. So we'll look at that. That'll probably be one of the tougher things to look at this year, trying to figure out, okay, what exactly do they want us to do there? It gets a little subjective in terms of what numbers you want to use, I think, in terms of especially the forward-looking viewpoint. So, we'll take I think Rich has historically been doing 15% the last few years. We'll take that. We'll try to follow some of the CECL guidelines and see how far off 15% really is from what maybe they're projecting with, their new systems or their new calculations. Maybe it leads to an adjustment, maybe not. It kind of the jury's out on that.
Right.
Well,
But
it's interesting, Justin,
we're
because I
thinking-
think, Justin, I
Go
just
ahead.
wanted to say, I think we have, at least when Kayla and I have done it together, we tend to look forward more than we look back, because usually by the time we get to it, things have been good in the past and now they're not good. So, we try to look forward and see what happens. So if you have any of those guidelines, if you could email those to Kayla and I, I'd appreciate it.
It's a good point.
Yeah, I'll
I was just gonna mention
send what I
in the past, a lot of entities have relied on history. Here's our experience. And our experience is always, we've had this uncollectability, and that's what we're gonna set the reserve at. And this new pronouncement is, I think it's been around for like Fortune 500 companies, particularly banks, to not only use historical, but also, what could impact the economy and build that into the reserve. And I think you're right, Rich. For the entities that have just looked historically, my guess is, this could impact them where they're going to have to elevate the reserve from where it has been. Where I think you have kind of said, yeah, we want to look at history. We want to look at, currently what loans do we think are iffy, but then also, we know the type of loans that we have and like what kind of impact is that going to have in the future. And so, that's the types of things that are part of this new pronouncement that are a little bit different.
What's really interesting is my son works at M&T Bank, and that's what he does.
Yeah, exactly.
Exactly what and it's very complex. And lots of formulas and spreadsheets and, you know,
Yeah.
it's, and they do it every quarter.
Yeah.
Yeah,
Every
exactly. Yeah. Yeah, a lot of it for the big banks is, you know, where's the breaking point and they have to show to the, again, to the regulators, here's where the stress points are and here's where we're at as far as the reserves are concerned. So, yeah,
Interesting.
yeah,
I'll be curious to see where it falls, because I mean, the EDA loan fund, they allowed us to give loans to not just manufacturing, but like restaurants and stuff, and they're still taking hits as far as unemployment goes.
Yeah.
So I'll
Yep.
be curious to see if we need to up that.
Yeah.
Because of that.
And luckily, Dave and I were talking about it. You guys at 15% is pretty high actually compared to your actual annual write-offs. So
Mhm.
we're kind of hoping it won't be a negative hit, but we don't, knock on wood on that. You know, we got to go through the process.
Right.
Did we use that same 15% for the EDA?
We started at 30.
30, that's what I thought. Yeah, so we're way higher.
Everybody was paying.
right.
So we reduced it to 15. But now we'll look and
Alright.
see.
Yep.
Because
So
I
the
have not
next
made
page-
those entries yet, Dave, so.
You know, real quick, one last thing, you know, everyone seems to suggest that the economy isn't doing well and unemployment, but the economy is doing well, right? Based on the numbers. I mean, I think perception, it's not, but I think based on the numbers, it is.
Right.
So it's interesting.
Yeah.
You know, do you adjust it or not? I mean, but anyway,
Exactly.
Well, the nice thing about it, it's just a balance sheet entry, basically. I mean, it doesn't affect cash or anything.
Right.
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 But we'll look at that.
Yeah. And depending on what kind of adjustment it is, I mean, we can talk about whether we want it to be what we call an audit difference or actually make it. So we can
Yeah.
look at that when we get there.
Yeah.
Page 10, so similar things as last year here, except for that very top one, GASB 96. So there is a new government accounting standard you're required to follow. And GASB 96 is software-based IT agreements. So if you remember a couple years ago, there was GASB 87, and that one was on leases, and bringing leases onto the balance sheet. Even down to copier leases, they wanted you to evaluate small leases, things like that. Things that had historically just been period expenses and, you know, you paid for them. They're applying the same kind of rules to software subscription-based agreements. So your accounting software, you know, any software really, if you have Microsoft, some sort of package that's set up for multiple years, it should be evaluated. Luckily, dollar wise, sometimes they're not the most, for an entity like you, they're not the largest things, but we will, you know, look at those agreements, see what kind of plans you have in place, what terms there are on those agreements, and see if, you know, we are required to report them.
So Justin,
as
if you had purchased your software and you're just paying a maintenance, or not a maintenance, helpline fee to, call in, that would be excluded from this usually?
I actually, that it depends on how it's written, I think. Like
Okay.
if that agreement is in their mind is part of the contract, it should be evaluated.
So if
If
it
it
included
is,
free updates and things, you have to take a look at that then. Okay,
yeah,
good to know.
Yeah, it's interesting. It's a good question.
Stuff comes from the county though,
Our Microsoft packages. do
Right.
the-
but the
Accounting
county
stuff,
software, we
yeah.
pay for that outright.
Yeah.
We bought the license.
Right.
We own it, but we pay for support and upgrades.
I don't
Yeah.
know what-
It's a good question from Rich. You know, we had quite a few entities over the last couple of years because there was so much pandemic grant funding
Yeah.
out there. They took a look at, contracts like IT and said, we have the funds, this is a good use of the funds, and let's
Move
Buy a
everything to the
program.
cloud, Dave?
Yeah,
Yeah.
let's buy a 5-year subscription and pay it all up front with the funds that we have available and so that would actually fall under this standard.
Mhm.
It would just be an asset that gets amortized over a 5-year period. You could argue it should have been prepaid expense, so rather than prepaid
Right.
expense, it's an asset that gets amortized, so ultimately not a tremendous impact on the numbers, just presented a little bit differently.
So, and in my opinion, from the government standpoint, that decreases your expense, so you don't get as many deductions. We're the only country that does that, by the way. Europe, they buy equipment, it's expensed.
Everything.
Everything's done right away. Everything. Not here. Okay.
All right. Moving on, we'll talk about audit strategy. So, obviously the first facet of it is our assignment of staff. You have myself. I've been on it obviously a number of years now. I think at least 10. Dave has been on it. I don't even want to guess how many years. We have Rhiannon Zink, who was on it last year and helped out some. She's going to be helping out again this year. So, talking about the audit staff, we go through your internal controls, what we understand about your entity. We do some what we call substantive testing procedures. So we look at, tying out actual numbers to outside documentation. We sent quite a few confirmations for the new loans. I have gotten 3 or 4 of them back. I think I sent close to 10 or 11. So we are getting some of those back. Then we also, we look at your legal communications. We look at prior year comments, making sure you've addressed those. And then, we also do internal control testing. We test payroll. We look at cash disbursements. And then for the loans, we do some receipt testing there. So then the evaluation of risk. So this is kind of where our opportunity to talk to you guys about risk. What are your audit area concerns? What are your, where's the overall risk? We will have inquiries with staff while we're there. Any new accounting complexities, like the CECL may be something that's a little more complex. Now, I think this first year we're going to probably provide some support in getting there. So probably not as risky because of that. The legal environmental concerns, anything going on outside. Obviously there were some a New York State audit that came out that had some outside effect on your entity. So just talk about those type of items and any concerns from the audit committee's perspective or management's.
Are there areas that audit committee or management, like in the current year, obviously you had a state review and adopted a lot of new policies.
We just got a letter a few days ago from the ABO that they want to know what the follow-up was to their report that they issued in June of last year. So we've got our group put together to respond to that. Feel pretty good about that.
Good.
Another big lift, but we've done basically everything they asked. So.
Justin, I don't know if you'd be interested in seeing that letter. Our follow-up response, basically a summary of what new procedures we've adopted. I'm assuming that wouldn't hurt for you.
Yeah, I think we would want to see that.
And they're all on the webpage now. Too.
Yep.
Every new policy is posted very nicely right in that.
Actually, Jason.
Jason.
Jason did that.
And we're renewing our website
Yes.
too.
Okay.
We've been working with a company and we should be rolling that out in probably April. But it's just, our old website is old, clunky, hard to manage. We're gonna have a new website that really is gonna provide more transparency for the public to be able to see all those things and not have to search too much, so that's all good.
So Dave, expenses for a new website, would that be amortized over 5 or would you?
It's a good question.
Okay.
Really good question.
I'm been
Yeah.
expensing it 'Cause we don't even have it yet. so
Yeah.
It's like,
Yeah.
it's been expensive. Okay.
Okay. Yeah, I think that's probably appropriate. We can look at it.
I'd rather do that
Yeah.
than not expensive and then
Exactly.
have to put it back to expense. So we've
Exactly.
just been expensive and everything. Yeah, okay.
It's a lot of work, by the way.
Yeah,
It's a lot.
yeah. Internally and externally.
Mhm.
How about big events? Any big transactions that are a little unusual? Sometimes you have some sales and
Mhm.
Sold Talcott Street, right?
that's-
Yeah, right.
that was
done.
major.
Paid off the county bond.
Oh, yeah.
Yeah, the bond, right?
Yeah.
Oh, yeah, the county is gonna be purchasing a bond, hopefully, from us for the grant that we got from Fast New York, Empire State Development for the Ripley Shovel Ready site.
Okay.
So that's 5.25 million.
Mhm.
So we're gonna be taking that to them in February, and hopefully they approve it.
Okay.
That's
It's reimbursable, because it's a reimbursable grant from the state, you gotta spend it, to
Yeah,
get it.
so it'll be like a short term.
Yeah.
We need
Less
need
than
the cash to
2 years,
come from
3
you.
years, maybe,
Yeah.
3, and we're gonna wait as long as we can before we borrow that, so we're not paying all that interest sitting on it.
Gotcha.
Good deal for the county. I mean, they'll get a little better rate than they would get on their normal investments and we certainly aren't paying the bank rate. So
Mhm.
win-win for everybody.
Exactly.
And again, unlike the other bonds, this one will be, I mean, I wouldn't allow them here to take the money unless I knew we were getting it. So,
Yeah,
but Nate and them have done a great job putting all that together.
okay.
Bids, quotes, and, of course, anything we do there will be prevailing wage. We'll go out to bid, we'll do it just like we did at Mason Park a few years back, went out to bid on all that stuff.
Yep,
County helped us with that tremendously.
great.
They have put together all those bid specs for us, so.
Awesome. So is that in place currently or is that in the works?
What's that?
Is that the loan with the county?
No, we're going in February.
February, it'll
Yep,
be,
yep.
okay,
in legislature.
We probably wouldn't get that money till 25
until 25, okay,
with the way the planning's going. And we did purchase some of the property in Ripley
okay,
and we just purchased some more in January.
Yeah, those are on the books for 23.
Yeah, the phase 1 acquisition of property is over.
okay. Yeah.
I've got all those documents of sale and all that. I think I put that in the share file, but I'll double
Okay,
check.
perfect. So I think probably, it is a good opportunity in the management discussion analysis section of the audit. There's factors impacting the future. It seems like this is a major event that I want to discuss a little bit. And then,
Right.
if some of those contracts have been enacted before the audit gets issued, there's also a subsequent event footnote that, maybe we'd have some language there as well.
Yeah, right.
The other thing with the sale was, as you know, we had 2.2 on our books as owed,
Mhm.
what the original amount and then some interest. The county had written theirs down to $1 million.
Okay,
They had never booked any of the interest receivables. They only had the 2 million.
just a 2 month.
2 years ago, Mark, they wrote that down to $1 million. They put $1 million in uncollectible,
Okay,
but we were able to give them $1.4 million. So I think they were pretty happy that
that's awesome.
gave them a bump, but that also gave us a nice bump.
Yep.
On the balance sheet. So,
Exactly.
so,
Yeah, so that'll have a pretty major impact on your
oh yeah,
Mhm.
financial statement.
800.
Yeah, exactly. Awesome. Okay,
I can't think of anything else, really, major events. Been busy. The projects seem to get larger.
Mhm.
Well, this year at least, we had 2 big projects, obviously Cummins Engine,
Mhm. Yeah,
542 million,
huge.
but we only provided sales tax exemption.
Mhm.
Our part of it was like 3 million of incentives, but then Wells, 250 million,
Same thing.
so.
Yeah,
We're hoping to close that this week. That hasn't closed yet.
okay.
So they say I'm signing today. We'll see. But it's interesting that, those large investments in the community are just fabulous.
That's awesome.
Yeah. Yep.
That's wonderful.
Can't think of anything else. Kelly, you think anything?
All right.
Like I was gone.
You have things to do.
All right. So then we can talk about audit timetable and deliverables. So obviously deliverables, our audit reports, the gap letter, the gas letter, the single audit letter, the consolidated financial statements. And then we also provide what's called a governance letter to the audit committee and board. That just discusses if there are any issues during the audit and communicates any audit differences that didn't get recorded. And then a management letter, which those are the items quite often best practices. They don't fall to the level of needing to be a finding that's in one of these reports, but maybe something we notice that could be improved, or maybe a new accounting standard or something like that that you should be on the lookout for. And then the CREDC 990. So that we'll work on that once the audit's complete.
Now,
So
how
we
did
plan to
things
start
change?
field.
Oh, sorry. How did
Go ahead.
things change this year versus what was done in the past because of, the ABO audit? Requested or recommended that we break up the IDA and CREDC and CRC and treat them separately, separate Paris reports, separate bank accounts. So does your audit change now because of that?
No, I think they've always been broken out separately within the audit. They have silos that have been separated within the audit within your financial statements. And then it's ultimately you can see the consolidated total. So
Yeah.
I think from a financial reporting, I know you've done some things with the bank accounts. But again, I think ultimately with the reporting itself, it's not going to have an impact on your financial statements.
Yeah, and as Dave said, everything functionally was always separate. There was no,
Yeah.
and if there was a mistake made that way, let's say the invoice is coded wrong, with the wrong fund on it. Whether you have a separate checking account or not, it's still going to be in the wrong spot, So it all boils down to, honing in on that. Where should it go right at the beginning?
Mhm.
So, and Nate and Kayla and you, Mark, everybody, we got a nice system in place. Got double, triple checks on that, going through everything. And, it happened so fast. I mean, grant after grant after grant, Nate and Mark did a great job bringing in the revenue but the system was working much better than it was when we began. So, and thankfully the accounting software with the funds can handle that. So if we had to have separate, a financial package that wasn't coordinated, we'd be in trouble. I know that. So.
Yeah, for since CREDC / CPEG has so many additional funds lumped into it. I tried to create a master spreadsheet with different tabs for each fund. And then because there is some money moving from one fund to the other with the authorization of whoever was giving the money. Because some of it can be transferred to other projects if need be. And in my folder with that master spreadsheet is an additional folder for each individual fund with contracts and signed agreements and things like that. So I'm trying to keep everything straight. And in the spreadsheet, if one fund is giving 20,000 to another fund, it's made note of, in the ins and outs or the funds on each tab. So I'm hoping that Justin, that'll help you guys keep track of things a little bit easier, but also ShareFile doesn't like it when I try to send things that are segregated. It just lumps it all in. So
Right.
If you need any help deciphering what contract and whatever goes where, just let me know. So.
And to Mark's point on that recommendation, for example, the separate checking accounts. We had talked about any expense going forward here. We're setting this up. We have the checks. We're getting ready to go. That we would write things. If it was a CREDC expense, it would come out of the CREDC checking account. But for example, we only have one employer here, the IDA. So with the salaries that all will come out of the IDA, and then Kayla, as we have in the past, either allocate directly, Dave, on somebody who works 100% in CREDC. That's where they're going to get charged.
Yep.
For people like myself and Kayla who work on everything, the time study will continue to, allocate those. We are we are just finalizing and should have the final draft of the cost
I
share.
communicated with Bob this morning.
Good.
Cost share agreement,
Mhm.
management agreement, that spells all that out.
All that out,
and
perfect,
That adopted in February.
awesome.
Yeah.
That's good,
Yeah.
okay.
All right, and then the last page, just talk about timetables. So next week we are planning on working on the audit. Kayla, I'll probably get together with you on what days, are best for us to be on site. We kind of do a hybrid where we're in and
Yeah.
out and it's kind of easy with your location. Honestly, we typically just
Right.
work in our own offices and walk down and see you. But we'll coordinate what days, just to make sure there's nothing out there that we don't show up on Wednesday and you weren't planning on being here for some reason. Meeting with the audit committee to review the report. So before the board meeting, I guess probably we should start at the board meeting date and then try to find a date for the audit committee to go over the audit prior to that. So
So the
when
twelfth-
is the
Can it be
the March
directly
board meeting?
immediately before the board meeting or not?
I would not recommend.
I don't think so,
Okay.
just because we
Yeah.
typically have a draft that's pretty final, but I think
Okay.
in the past, there might be wording on one of the disclosures that gets discussed with the audit committee, say, let's reword that disclosure a little bit. And I think they have opportunity to make that change before the board meeting,
So we have a 27th.
27th, yeah.
27th.
26th,
Right?
27th,
27th.
26th is the Monday.
What year am I in?
I don't know.
I'm in 24.
Are you in March?
March 26th is a Tuesday on mine.
March.
March,
We're talking
February.
February.
Well, we're talking
Oh, wait.
March.
Oh, are you?
Yeah.
Oh, okay,
March.
sorry.
March 26th is
Yeah,
the
we're
board.
March.
26th.
Sorry.
Sorry about that. I haven't.
Yep, the
Same
26th.
thing.
They're good, but they're not that good.
Sorry about that.
While, Ray.
I'm going, what do I
Sorry.
I second guess everything these days when I do it. I'm getting old.
So I'd say probably either the Monday, Tuesday before that, or the previous week, like Thursday or Friday.
So
something.
I'm gone that week, the week of the
The week, the prior
11th
week.
to the 15th, yeah.
Okay,
Friday,
18th.
18th or 19th, maybe then?
you're gone that week, right? Second, the week of the 18th?
No, the week before that.
the week
Oh,
before
Yeah,
that.
I get
Okay.
back on the 17th.
would
say let's skip- The 19th is good. I'd say skip the 18th,
Yeah.
just in case.
Right, okay.
Of the 19th,
Is that a good timetable, Justin?
good for you.
Yeah, I think that seems doable.
8 o'clock?
8 o'clock on the 19th,
Sure.
Tuesday?
Yep.
Can you send out an invite?
I will do that.
All right.
And the meeting on the 26th, what time? That's 10 o'clock usually?
10:30.
10:30?
And we're buying you lunch too.
Okay, we have lunch.
Yes.
Where's that meeting at? Is that here?
Here.
Just
Right here.
all right.
And due to the complexities and the things that the ABO pointed out, we've engaged Harris Beach to help us with the Paris report and the reporting and get everything in there. And, they're gonna lay out some things for that.
Okay. Good.
So they're gonna help. But again, anyone has to go in after it's audited. So I get that week will be
Yeah.
throwing everything in there. on that.
Exactly.
But a lot of the other things, Kayla's already worked on a lot of it,
Mhm.
getting the payments, the exemptions
Yeah.
and things ready. So.
Yeah, a lot of the Paris, I'm assuming is like the supplemental
Yeah.
disclosure
Oh,
type
yeah.
stuff, which is significant.
How many left-handed will you have on
Yeah.
the job and that type of stuff, yeah. Very
So
deep.
you're probably working on that now, I would.
I made the mistake of, Julie Marshall from Harris Beach gave me, an example letter that some of her other clients sent to their, pilot clients. And it's kind of all encompassing. It asks for insurance documents. It asks for, ST 340s and, like
NYS 45s.
sales tax and New York State quarterly reports and stuff, just as backup documentation. Well, our clients aren't used to that. They used to get just a simple couple sentence letter with here's your previous year's, Gary can attest to this. Your previous year's head count, what's your current year's head count? So I've had a lot of phone calls and emails, and I'm either going to trim the fat or go back to what we used to do, because I've been inundated with responses. I feel bad because we never used to hold our clients to that reporting standard, but also Julie made a good point with, the ABO kind of came down on us, you really should be
Mhm.
crossing all Ts, dotting all Is. So this was just an attempt to try and make sure we're covering all bases, and I threw people for a loop, and I feel terrible,
Well,
but
that's the response to them, right? I mean,
Yeah.
we had an audit from the state. And we need to,
that's what I've been
What we
telling
need
people
to
to,
do.
yeah,
Yeah.
yeah.
sorry.
Yeah,
But
exactly.
there were things that I should have probably cut from the letter, because it didn't necessarily apply to hardly any of our clients, so,
Or with our documents that what we required them to provide.
yeah,
So.
that too,
Well,
so.
well, it's interesting. We used to have a bond with the Resource Center. They paid it off, but I would send them the FTE letter. We'd get it back. Well, their NYS 45 was for their whole organization. The bond was for a small building up by the mall. So one year they'd report 600 jobs, one year they'd report 12, because that's what was in the building. And I always used to have to tell them, it's only for the people in the building. We're not concerned with your group homes, and that we had nothing to do with that. And that's hard for them now, because their NYS 45 is all encompassing. So we'll work through that and make sure. But again, at the end of the day, somebody can print an NYS 45 if they want to send it in. So whether
Rich
it's
said, you
true or
do,
not.
you do what you think is best, and so I was like, yeah, let's send this, and that was wrong.
Yeah, and anytime I think that they receive anything that's divergent from prior years is what is like, wait a second,
Yeah.
last year, what's
yeah.
going on?
Yeah.
Last
It's
year,
hard.
you said 600 jobs, this year saying 12.
Yeah, exactly.
Yeah.
Well, good. It'll,
Sorry, Gary.
No, no.
all right.
Filing of the tax return, May 15th.
Yeah, so then the last one is the tax returns, which is.
Yeah,
June
and we've-
15th.
Yeah, we've historically extended that to November. I think we're usually more on a summer timeline there,
Yeah.
which, isn't the worst thing in the world. It's a automatic, easy extension to do. The IRS doesn't gives no hassle on that. So, just
Changes
turning
on
it
the
around by May
990, Justin?
15th. Yeah, the 990. Turning it around by May 15th is just kind of hard on our group, because we're
Mhm.
still in the middle of our year-end audits when that's occurring. So
Are there any changes to the 990?
no significant changes from what we've seen. They haven't released the whole new they don't that usually doesn't come out till sometime right around now, actually, the new form. But I haven't heard anything about any big changes, so I'm not anticipating it.
Because more than ever, that document is requested by many funders. Because our 501c3 receives a lot of the grants that the IDA is eligible for, and a lot of those programs are run through CREDC. So,
Exactly.
but we've gotten them everything we can get them.
Well, I promise I will never be on maternity leave again when you guys are requesting the information.
Thank you.
So. Promise.
Dave, did you see the email where somebody said we weren't filed with the Federal Clearinghouse, and I sent them the email? Somebody was checking on it. Do you remember who that was?
Crystal needed it for something. I don't remember.
But some group that said we hadn't filed.
EPA.
Might have been the EPA.
Oh, yeah, I think it was. Yeah.
And we sent them the email where they said you were successfully filed.
Oh, that's interesting.
I don't know.
There is a new, and this could be it, there's a new platform for the clearinghouse.
Okay.
And so now there's actually an old platform for ones filed prior to 2022, and then a new platform. And so if you go in the new platform, you can't see the old
Yeah,
filing, so that's
yeah.
probably what it was,
Mhm.
would be my guess.
yeah, okay.
Yep.
But
It's kind of the same form. There's not really any changes, but
Okay.
that's, the whole platform is on a different database almost, so,
Can't see the old stuff.
all right.
Good.
Any other questions or comments from the group? Awesome. Thank you very much. Thanks, Justin.
Yep, thank you.